the short of the inflation and growth data that we got from US and India is that we are well and proper in a Goldilocks scenario, which perhaps explains the all-time highs on the Nifty as well. First, the June US CPI number, the most important number because it's the biggest economy, the currency of the world, coming in at 3% versus expectations of 3.1. In the first place, it's come to 3 after being in double digits a year ago. And the month-on-month rise is as low as 0.2 against expectations of 0.3. Core inflation also coming down below 5. It came in at 4.8. The expectations were 5. Again, the month-on-month rise only 0.2 is led the market. And if you look at the futures prices, you will know that to expect that the Fed will be one and done. So perhaps July, and that is it. So US yields came crashing from an above 4% mark 2 days ago to 3.97 yesterday to 3.85. It's been a fall of 20 basis points in the past 48 hours. Indian yields also are following suit, watching US rather than our own inflation numbers, and the 10-year bond yield at 7.08 and 07. It had touched 7.1516 2 days ago. So that is helping rate sensitives. Realty once again coming out and performing, and banks higher too because bond prices will rise when the yields fall. The US rate hike fear dipping also means that the US growth doesn't take that much of a tumble as people were expecting. So more adherence to the soft recession, which is why IT, in spite of the not so flattering numbers from TCS and the actually bad numbers from HCL Tech, are still being greeted with green on the screen because their ultimate markets, US, is looking like coming out of rate hike fears. Just a word on the Indian June inflation number at 4.8 was a scare because we were at worst prepared for 4.6. Remember, the last number is 4.25. So the advantage over here, or perhaps the positive is here, it's almost entirely driven by food. It was vegetables that went up 12% month on month, and a little bit of pulses. When vegetables become expensive, people eat pulses. So pulses also went up about 3 to 4% month on month. But that was it. Core inflation, which is the stickier inflation, the one that can't be imported, services, that one didn't rise much, just 5.1, almost similar to what it was in May. So the net takeaway for all financial markets is growth good. And of course, even the IIP numbers in May came out higher than expected. So growth good, it gets a better chance because rate hikes will not be there. Inflation not so scary. That equals great macros and markets, explains the all-time highs in the Nifty.
Okay, all right.